All right, let's jump right in. Today, we're diving into what is arguably one of the most exciting real estate markets in Asia right now, Bangladesh. But more importantly, we're going to look at a brand new way for investors to get a piece of the action, without all the usual headaches. So let's get to it.
So, why all the excitement? Well, let's just start with this number right here, 12%. In major cities like Dhaka, property values have been climbing by up to 12% a year. Now, that is the kind of growth that makes investors all over the world really sit up and pay attention. It's a huge signal of opportunity.
And this isn't just some one-off thing, a recent blip on the radar. No, the market has seen this consistent, steady growth for a while now. It's being fueled by some powerful forces: rapid urbanization, a rising middle class, and a massive youth population. It's actually estimated that Bangladesh is going to need 8 million new homes by 2025 just to keep pace with demand. That's the engine driving this whole boom.
But that begs the question, right? If the opportunity is so huge, why has it been so tough for the average person to actually get involved? For most people, the door to this market has felt pretty much locked shut.
And the reasons, well, they're probably going to sound pretty familiar to anyone who's ever thought about buying property. First, you need a huge amount of capital just to get in the game. Then you have to deal with all the headaches of managing the place, navigating all this complex red tape, and trying to get financing. And even if you pull all that off, you're usually stuck with just 1 or 2 properties, which means you have zero diversification.
So what if you could just bypass all of that? What if there was a way to tap into all this growth without ever having to actually own a single building directly?
And that brings us to the solution. It's a financial innovation that's just now hitting Bangladesh, and it's pretty much set to completely change the game. Let's talk about something called a real estate investment trust, or a REIT.
So what on earth is a REIT? Well, in the simplest terms, it's a company whose only job is to own and operate a whole portfolio of properties that make money. Think apartment buildings, office spaces, hotels. As an investor, you're not buying the properties themselves. Instead, you're buying shares in the company that owns them.
Probably the easiest way to wrap your head around this is with a really simple analogy. Just think of it like a mutual fund, but for real estate. A mutual fund pools everyone's money together to buy a diverse portfolio of stocks, right? Well, a REIT does the exact same thing, but it pools investor money to buy a diverse portfolio of properties. The whole process is actually a really simple, powerful cycle. First, investors like you and me, we buy shares. Second, the REIT takes all that pooled money and has professionals go out and buy and manage a bunch of properties. Third, those properties start generating income from things like rent. And finally, this is the best part, a big chunk of that income gets paid back to us, the shareholders, as regular dividends.
Now, this isn't just some abstract theory. Let's make it real by looking at the very first company of its kind in the country, a company called REIT Limited. They are the ones blazing the trail and bringing this model to Bangladesh. So what kind of stuff do they actually invest in?
First up is residential, and we're talking about modern, fully furnished serviced apartments. These are perfect for professionals or even business travelers who need a flexible place to live, short-term or long-term, that comes with everything: kitchens, Wi-Fi, housekeeping, the works.
Next, they're investing in the future of how we work with their commercial properties. Think cool, modern co-working spaces, virtual offices that give a small business a prime address without the crazy overhead, and meeting rooms you can just book when you need them. It's plugging directly into today's startup and freelance economy. The portfolio also gets into some very stable and growing sectors. In hospitality, they're tapping into the growing tourism market by investing in hotels. And in healthcare, they're getting into specialized medical facilities, which is a sector that has massive growth potential as the population's needs keep expanding.
This part also shows just how forward-looking their strategy is. They're investing in the actual backbone of the new economy. This means industrial warehouses, which are absolutely essential for the logistics behind the e-commerce boom, and data centers, the physical buildings that power our entire digital world.
So, here's the really crucial point. By buying just a single share in a company like this, you're not just investing in one apartment or one office building. You are instantly diversified across residential, commercial, tech, and healthcare properties. Your risk is spread out across the entire real estate economy.
Okay, so let's bring this all back to you. We've seen the market, we've seen the model, but what does this actually mean for an investor? What's the payoff here?
Let's just put the two approaches side by side. With traditional ownership, you need a mountain of cash. It's a ton of work, and you get very little diversification or liquidity. With a REIT, it's the complete opposite. Your entry point is low, there's basically no management effort on your part. And you get instant diversification and high liquidity, since selling a share is way easier than selling a building. It just makes real estate accessible to everybody.
And what about the returns?
Well, a company like REITs Limited puts it out there very clearly. Their goal is to achieve an annual dividend yield of 7% to meet what investors expect for their income. That's a clear, tangible target for the passive income you can expect to earn.
So let's just quickly recap the key takeaways here. REITs let you get into a high-growth market with a low amount of capital. They're designed from the ground up to generate passive income through dividends. They instantly diversify your investment, and, this is a big one, they let you avoid all the hassles of being a landlord, and it's all done within a transparent, regulated system.
And that leaves us with one final, big question to chew on. As models like this one make large-scale, professional real estate investing accessible to the everyday person, could this be the key that unlocks the future of building wealth in some of the world's most exciting emerging markets? It's definitely something to think about.